traditional method is simply just not safe. It became very clear to me, very close to home to me, on Wednesday. On the same day, I had a call from my father, myself trying to navigate media's conception of what was happening. And my father's on that page, stock market volatility. On that same day, about my concerns, and on that same day, Andrew notified me that both him, his team, and his clients were all profiting greatly from the volatility. I think that was the pivotal moment. When something hits really close to home, it's a pivotal moment when you realise this is real. It's very real, and it's very evident that we need more tools, more skills to provide us everyday people with the ability to profit from volatile market. So without further ado, we'll bring on Andrew. I know many of you are on your lunch break and whatnot, so we'll make sure that we stick to the facts and give you a urgent market update, debunk the media hype, and we'll welcome Andrew. Are you there, Andrew?
I'm indeed, Sam, and thank you very much for the invitation, and good afternoon, everybody. We'll get straight into this because I know people are pushed for time, and as I do that, obviously we are talking about trading and investing, and as some of you know already, that does involve risk. Past performance is no guarantee of future performance. That's the legal stuff out of the way, and let's be frank for a moment, the way that most people's investments have performed over the last 12 months, you'd probably hope that that isn't an indication of future performance either. Now, part of the issue or challenge that is faced by so many investors out there is that the current model just isn't working in the real market right now. And talking to Sam through the week, you realize that so many people are either invested in managed funds or have exposure to the stock market by buying shares. But taking that approach to markets is kind of like trying to play golf and using the same club for every single shot. Market conditions change, and what we've seen globally over the last week or two has been a very, very good example of why having a more flexible approach to trading investing isn't something that people should consider. It's an absolutely essential piece of structure and strategy that you need, because if you're playing red or black, you're betting on the market going up. This is probably how the last week has really felt for most people. It's been a very emotionally charged experience where, and I've spoken to people that know of my involvement with the markets, and say, oh my God, this is a disaster. And it's like, well, which market are you looking at? And we'll go through some of the nuts and bolts of how people make decisions in this presentation, but perhaps more importantly, by the end of this presentation, my goal is to share with you a very clear and defined pathway to help you be not simply surviving, but thriving in this environment. So yeah, the big one this week, obviously, was the US election. Needs no introduction. And look, most investors, as we got through the run-up to the election, and particularly as the vote started to pour in, we're in a state of panic. And panic is a very highly charged emotional stage to be in. In a panicked environment, sometimes the decision-making that people make can be very flawed and driven by emotion, and not necessarily based on a good quality outcome. You know, oh my God, this thing's collapsing, let's just sell out of this and walk away, which is what a number of people did as they saw the screens turn red on Wednesday afternoon. And look, it's not unexpected. The reality for many people, part of the problem, and no pun intended with this, but some of the weapons of mass distraction out there are the very, very narrow channels that people use to get their information from. And you've seen that post-election with things like Facebook and some of the random postings that people put up about this is the end of the world. Now, I'll be very clear in this presentation, this isn't to push any particular political agenda. It's to help you guys that have taken the time, and I sincerely appreciate you trusting me with your time, to develop a set of skills that will enable you to profit through events not just like the one we've had, because that's been and gone, but future events that come and go like that. And quite often there's a real perception of what's going on based on the damage done by social media, which doesn't necessarily portray good quality news. So before we get into the nuts and bolts of this, I want to share with you something that you may or may not be familiar with. It could be the cold beer being poured, or it could be the word norepinephrine. Quite a mouthful, that one. And the reason I want to talk about this is that when we talk about helping people become better traders and investors, and some of you on this broadcast perhaps have done a stock market training course of some description, and those courses, whilst they're very good or not so good, teach things like moving averages and support and resistance and PEs and all of those sorts of things. The reality, there's a far more important fundamental skill that's needed if you're looking to make profit, and I would assume that by virtue of you investing your time today, you actually are looking to make profit from this. And that's understanding the psychology of investing, not just the techniques for actually doing it. Now, norepinephrine is actually, it's a chemical in the human body which is released in anticipation of something. Now, if you think about that picture of the beer, and some of you are up here in Queensland, it's a nice hot sticky day up here. The prospect of a really nice cold beer, I just want you to think about it for a moment. Close your eyes and imagine getting it out of the fridge and the condensation's running down the edge of the bottle, and you pop it and the froth comes out of the top of the bottle, and you can't wait to get your hands on it if you've been outside in the heat all day. And the reality is that anticipation of the beer is probably far more appealing than the actual beer itself. And trading and investing is no different. The anticipation of an event is actually far more significant sometimes than the event itself. Now, that may sound a little bit hairy-fairy, so let's just dive into this. History repeats itself. Now, if you wanted a DNA of a trading plan to profit from what's happened this week in the election, seeing what happened in the UK through to June 24th when the Brexit vote happened is probably one of the most classic examples. Here you had a situation in the UK where people could vote to exit the euro or to stay in. It's a binary outcome, one or the other. Really no different to the vote that we've just seen in the US. Is it Republican or Democrat? Is it Trump or is it Clinton? Simple as that. And the difficulty and the challenge faced by so many traders that don't have the right skills is that they try and guess what's going to happen. Now, my big tip to you, and please, if you're taking notes, and I'd encourage you to do that, note this down. Successful trading and investing is not about trying to predict what's happening, what's going to happen. It's about responding to what's actually happening. Because if you try and predict the future, you're either going to be 100% right or 100% wrong. And those odds are terrible. That's black or red. What we look to do instead is prepare ourselves for events and use strategies that we know from time tend to work well. And in this case, in the case of the UK exit from the euro, Brexit, instead of trying to pick the currency move up or down, we knew that in times of uncertainty, one of the things in markets that changes is volatility. Markets become extremely fickle, very volatile, and very responsive to news flow. And you can actually trade volatility. Now, if volatility increases, in other words, if the market plunges or if the market flies up, it's become a more volatile market. You can trade something like the VIX index in the US. It's a futures index. You can trade options on it. And here's a chart of the VIX index in the run-up to the Brexit vote in the UK. And I'd note these green bars here. Look at this massive increase from 12.5 up to 21 points on the VIX index. They're the sort of things that we look to trade. Now, this was up to the Brexit vote in the UK. Now, taking that known knowledge of the past on board and knowing that we're not in the business of trying to guess the US election, in fact, most people would have guessed that wrong had they have tried to predict it. Instead of trying to guess it, what we're going to do is say, okay, a known quantity here is that in times of massive uncertainty, and an election outcome is one of them, volatility in markets increases. So let's trade a known entity now, the VIX index, which I've got there for the euro, going into the US presidential election. And here you can see the strong run up again from about 12.5, 13, all the way up through this chart here as the volatility continued to increase going into the election. That's how you make money, not from guessing the outcome from the election, but understanding human nature, the psychology of markets, the norepinephrine, if you will, of how people think going into something like this. Now, that's money in the bank. That's a trade I took in the run into the election. We're out of it now because our expectation is now that uncertainty is gone, the volatility is going to drop away. And that's precisely what we've seen. So already, even though we've only been chatting for just a few minutes, kicking the can around, you now have an instrument which could be your go-to place in times of major world crises. If there's, for example, some major geopolitical events, say China in the South China Sea, the VIX index is a great place to go. Now, you may or may not have known about that. And even if you knew about it, you might not have had the confidence to do this. And that brings up another point. You know, successful trading and investing isn't about what you know, it's having the confidence to apply what you know. And one of the things that we really focus on and why Sam and I work together as we do is to help empower people to have that confidence. Let's move on from here. Recognizing things for what they are, not worse than they are, is the key thing. great quote, I suppose. And fear of change is natural. Markets don't like uncertainty. They don't like change. But change is inevitable. It's one of the few things that we see in life. And part of the reason why this market has responded in the way that it has is the fact that it was a very, very decisive win for the Republicans. Now, I keep referring to the Republicans as opposed to President-elect Donald Trump, because the election isn't just about the president, it's about Congress and the Senate behind that. And this decisive win, and you can see on the chart here, you need 51 seats to have control of the House there. This decisive win is a massive, massive plus for you and I as investors, because for the last 10 years, it's been very, very difficult for the previous administration to get any kind of legislation passed through government. Even though it might be a good policy, because there's been no real majority control in the Senate, things aren't getting approved. In fact, without talking of the US, we could probably sigh with frustration that we've seen the same thing here in Australia between the Senate and Parliament, same thing. Now we've got a very clear mandate with a government that's been elected with a strong majority, and irrespective of your political views, they now are in a position where government policy, not the president's policy, but government policy can get approved. And that, guys, is something that's very, very good for markets, because it's very good for the economy. Now, how good is that for markets? Here's a million-dollar question. And I'm just going to run through some positions I'm in. Some of my clients are in these trades too, and I hope that you guys are too, just to give you an idea of the magnitude. You know, going into the election, a lot of people were sitting out of the market or panicking during those red days and selling out. And this is what's happened subsequently. Now, this is a chart of Goldman Sachs, and Goldman Sachs is obviously very tied to the US government in that it's partly the major treasury broker for auctions in that space, but also one of the larger investment banks there. So over 3 days, you've seen the share price of Goldman's go up from $180 to just over $200, $201 last night. Now, that sort of $20 move, 10% in 3 days, is the difference between having a positive year for your investments and a not positive year for your investments. In fact, if you look at the chart for Goldman's, it's been in a very, very strong trend for the last few months. And these are the kinds of things that we look at. Okay, that's in the US. Another stock, and there's a stock I'm holding at the moment, is a company called Pfizer. And again, here's a stock that's bumped from around about $30 pre-election day to over $33.50. Again, that's an incredible move, over 10% in 3 days. Now, that's great profit, but it's only great profit for people that had the courage of their convictions to get into trades. And when some people were running for the exit doors, they were the people that were running inside to take those shares on board. Think about 9/11 as a disaster. You know, you had people running out of the buildings, and you had a handful of firemen, brave as they were, running in to try and fix the problem. This is the same when you get panic selling in markets. That's actually the time to buy. Yet I know as a retail investor how difficult a decision that is to make. You know, if you watch the mainstream media, for example, you know, you're going to see people come on board and brag about how many billions were wiped off the market last night. You notice they don't come on the next day to say how many billions were added back on. And this is why, you know, so many people have been wrong-footed by this, because instead of knowing what they should be doing, they've been guided by the media, which has a very different agenda. It's there to sell advertising space. There's another trade I'm in at the moment. There's a company called Marriott Hotels. And those three companies I've talked about are big blue chip companies. Again, this has been a stellar performer, $67 to $75 over the space of just over a week and a half. These are real trades, real profits being banked, and real positions that I've got in my account. These aren't potential trades. This is what I do, and this is how I help my clients, by advising them on how to make a decision to get into these kind of trades, not after the fact, but in time to better profit. Good example of that, perhaps looking at a little bit more locally, is Fortescue Metals, nice Perth company. Last Friday, I was running a training session for some of our clients. I went through the trading strategy that I like to teach in these market conditions. And I gave the clients that strategy. I said, right, let's find a stock that meets it. And they picked Fortescue Metals. We got into the trade at 5.29. And when I say we got into the trade, after we found the trade, I said, okay, you happy with this, guys? It meets the criteria. Let's trade it. Here is my account. I logged in. Let's place some money on this. Because, again, it's about building confidence, not just knowledge. Here's a stock that's now north of $6. When most investors are fearful of the market and thinking things have been very terrible, it's actually been very profitable. It just depends on the type of spectacles or the lenses that you're looking at the market with. And these are real lenses, and this is what we do real time. So on that note, and we've just taken a bit of a snapshot of going through the election and what markets have subsequently done on the back of it, where does that leave us in terms of the road ahead? Now, a strong mandate from the US president, I believe, and not just the president, but the Republican Party in general, is likely to be a good driving force within the US economy. There's been talk of infrastructure spending, amongst other things. And look, I don't just go off what I read in the media. I've just had 6 weeks in the US, partly with my family on holiday and also as a bit of a research trip, to see firsthand what's going on. And I think an investment in infrastructure, which is something that's fairly high up on the president-elect's agenda and party agenda, is something that would be a massive economic stimulus for the US. Immigration, which I know was one of the more divisive issues, well, actually, it wasn't one of the more divisive issues. If you look at the voting patterns, most people that are citizens in the country are quite happy to see people that shouldn't be in that country out, creating more jobs for the people that should be there. And that was reflected in the vote, including the Latino vote, I might add. And so, a stronger jobs market for people where instead of needing benefit and struggling, they now have income. These are all things that need to happen rather than cliches or these are things that could happen. But nonetheless, they would be deemed as positive. The possibility of people like Carl Icahn joining the Treasury team to help manage the economy. And here you've got a guy that started with nothing and is worth billions. The guy knows about managing money. And having a team behind you that can be very, very strong. But what if the US becomes more isolationist and does put up barriers? Maybe the wall around Mexico happens. Well, it's not a new thing. The US, when we talk about history repeating itself, the US did that in the 1930s. If you go back through time and look at the Roosevelt government, the US post the Great Depression was a very isolationist country. They didn't get involved with foreign policy. Japan, for example, invaded China in the mid-30s, and the US sat back and let it happen. They weren't interested in getting involved in world affairs. They just wanted to get their own economy out of the quagmire of the Great Depression. And isolation worked. They had the New Start policy. They built infrastructure. They built freeways. Job creation happened, and the economy moved from being in a huge, unfathomable recession to become the world's preeminent economy, not just for a few years, but for 6 decades. And so isolationism from the US perspective is not a bad thing. And bear in mind, the US president's been elected to run the US, not the rest of the world. But that then presents challenges for countries like ourselves or China in particular in terms of trade agreements. And there's an uncertainty there, and that's something that we need to be very, very aware of. Because uncertainty can cause choppiness in markets. Well, already from the 20 or so minutes we've been talking today, you now have a skill set. You can go to the VIX if there's uncertainty in markets, for example. You've got a way now of being able to profit from that uncertainty. And I'm talking about investing in both the Aussie and the US market, by the way, which we do both of, because both offer different benefits to our clients here in Australia. Investing in companies like Pfizer or Goldman Sachs, you can't do that in Australia. They're not listed here. So, that there is some risk to trade. There's also a new era, potentially, they've talked of in the US, of the end of dollar politics, the lobbying. And lobbying, probably more than any single thing, is responsible for the US being known as the best democracy that money can buy. Not really a democracy. If you lobby enough, you get in. And we've seen the big food and big pharmaceutical and big energy companies lobby and get crazy policies through. Look at the labeling on food in the US. The food lobbying groups have managed to get a change to food labeling there, which is a material thing. But for Australia, where does that risk sit? Well, we risk being marginalised for a few reasons. If you look at the historical relationship between the US and Australia, Australia has a massive strategic benefit to the US. Our geographical location in the Southern Hemisphere, we're a friendly nation in the Southern Hemisphere where they now have some troops. Politically, it's been a strong relationship over the years, but you wonder how much that relationship could be weakened by some of the comments and rhetoric made by people in Parliament about the now president-elect in the US. And those comments have got the ability to come back and bite. It's all well and good being nervous about trade agreements, but when you make outrageous comments about people, well, there are consequences to that. So, there is a risk that there could be some uncertainty. Right now, we have a couple of months going in prior to the Trump administration taking over, where it's the tail end of the Obama one. So nothing's going to change immediately. But I think as the notion and ideal of what a Republican majority in both the Senate and Congress, forget about the White House for a moment, but in the Senate and Congress really sinks in, it's likely to be a far more supportive economic background there for both the US economy and potentially the rest of the world, because a rising tide lifts all ships. A strong US economy is good for everybody. over the last decade and a half, we've seen the US economy struggle, and part of that's been the $350 billion a year going into defense and war in the Middle East. And countries like China have stepped into the breach to be the driving force for the world economy, and that's great. However, a rising tide lifts all ships. A strong US economy is good for everybody. It's a question of making sure that you're positioned to really profit from that. Now, if Australia suffers on the back of that, that's why having the ability to be able to invest elsewhere, as I say, we trade both the US and the Aussie market, is something that may be particularly relevant to you, so that you can get your slice of that cake. You know, we've got our own issues here that, you know, the US election and the news around that has really clouded over. If you look at the housing market, for example, you look at the talk of what interest rates are going to do, which have been cut to the bone, talk about the relevancy of the big four and how secure they really are, given they've got a mortgage book full of, you know, fairly expensive, in some cases, highly overpriced properties. You know, there is the potential for storms ahead. And I say all of that for one simple reason. You know, a lot of people like the idea of a trending up market, but you can't have the rainbow without the storm. And markets don't just go up, they go down too. And as an investor, by going back to our golf analogy at the start, having the ability to reach into that bag of golf clubs and to pick the club that's right for the circumstances is not only how you make a lot of money from this, but it's also how you keep a lot of money in these kinds of situations. Because many people that manage their own super, or many people that don't manage their own super but have got it in the stock market, have been hurt badly over the last 12, 18 months with the unsettled levels markets have been at. Whereas those people that have built the skills to know that when you're on the green you use a putter, but when you're on the tee box you use a driver, you don't try and use the same club for everything. They've been in a position where they've really been able to capitalize, and I would love for you to be in that position too. Everyone deserves an opportunity for a better financial future, but it requires some knowledge, which is a given, and hopefully you've learned a few things from what I've just talked about here. But more importantly, the confidence to apply that knowledge, because knowledge on its own isn't power. To have any kind of power, it needs to be applied knowledge, and to apply something, you truly need confidence. So in terms of that, you know, how can we help? What are the next steps, I suppose? Well, there are a few. If you're an existing client of Australian Investment Education, we have a Trading and Investing Summit coming up in November. Make sure you register and come along to that. But for those of you that are new and perhaps haven't spent time with us in the past, perhaps you're a part of the Global One family and we haven't had the opportunity to meet, I'd like to extend a further invitation to you to come and join me live. 22nd, 23rd, and 24th of November, we're going to be running live training events. They're 3-hour events, and they're interactive, so questions can be answered. And you guys have probably got questions today that we can answer too. But you can see up close and personal exactly how this works and how it can work for you. Stock market and investing isn't for the big end of town, it's for anybody. The problem is that most people that get involved are looking for get rich quick, and sadly get rich quick doesn't work. You know, you take the average lottery winner, they're broke within 7 years because they haven't built a process, a reliable, dependable process to give them uncertainty, certainty, should I say. And certainty is such an important thing that we are in uncertain times. We don't know what's coming next from the US administration any more than we know what's coming next out of Canberra. And so that uncertainty requires us to get our human needs met by having a way of being a little more certain about our future, and that can be taking control. And if you are going to take control of your money, hats off to you. You and I are kindred spirits, and I wish you all the very best on that journey. But what I'd also say is if you're planning on taking that pathway, make damn sure you know what you're doing and you've been trained properly, not based on theory, but actually based on what works. And I've shown you 3, 4, 5 trades. They're live trades that we've run over the last week that are real trades where real dollars have been banked. And I'd love for you guys to better participate in those trades too. And those events, and I think if you have a look in the chat box, there's a link there, www.globalone.com.au/Andrew Baxter. Click on that, and if you'd like to join the live 3-hour workshop in Sydney on the 22nd, Brisbane on the 23rd, or Melbourne on the 24th, you can register and grab a free seat there. And I'll go back and reiterate some of this stuff, but it's in a couple of weeks' time. And there'll be new developments over the next few weeks. Markets will be in more profitable position. Some of those trades I talked about will be in even stronger position. And there'll be really good news for you if you're on them. And it'll be an interesting learning experience if you're not. Because life rewards action takers, guys. So look, open to taking questions from you guys as you see fit. All the details for that event is on that link, so www.global1.com.au/Andrew Baxter. It's in the box there. If you haven't registered yet, come along. All you need to do is invest your time, and I can assure you that it'll be 3 hours of content. It'll be 3 hours that perhaps help you reshape not just 2017, because that's just 12 months, potentially the rest of your life, because you can't unlearn what you know. And I've talked about some of the stuff that I've done to position myself and some of our clients to profit from what we've just seen in markets. And there's no reason why you can't be enjoying the same benefits. You're just going to know what to do or have someone that's going to guide you. And that's our mission, to help 100,000 Australians out there, people just like you and I, have a better financial future by being able to manage their money more effectively. So US election's been brilliant. It's been brilliant from an investment perspective, and given the outcome, irrespective of personalities, what we now have is a majority in Congress and Senate, which can now start to make sure that legislation and law and policy are not caught up in a stalemate and actually approved. And that's great for the economy, and that's great for markets, and that means it could be very good for you too if you've got the right exposure to it. So questions, guys, far away. We're on. We've got a few minutes. I think we can take anything that there's one there. Okay, great. How do you trade the US market from Australia? That's a really good question. Look, platform we use, the tool we use, actually, it's based in Australia. We're based in Australia. The tool we provide is based with an Australian broker, and on that one platform, you can trade a lot of different global markets, and that's something that's a real enhancement in technology. So, great question. Thank you very much for that, Pete. Another good question coming through there is, in terms of dollars to get started with, and that's the million-dollar question, of course. My recommendation to anybody and everybody, particularly those clients that come through our program, start small, because it's about building confidence in the first part. The money will come. It's a given. If the process is right, the results always follow. So, start small, build your confidence up in the sandpit, so to speak, and then when you get a little bit more confident, you can put the trainer wheels on, and then from there, you're in the green zone and away you go. But you've got to do a little bit of work to do that, and that work starts with a small account and getting the wheels turning. Superannuation, what do you do? Okay, so in terms of superannuation, that's a good question too. Thanks, Dave. The superannuation is an area for many people where they've got the ability to tap into their own funding. It's their money after all. But self-managed super is the way you need to go in order to do that. And we've seen a huge growth in people wanting to manage their own money simply because they're fed up with people losing it for them, and they trust themselves more than somebody else. So self-managed super is a huge growth area for good reason, and we'll talk a little of that on the night. Make sure you register so you can get along to that, global1.com.au/Andrew Baxter. Book in there and we'll talk a little bit more we can do with super. Okay, what's my prediction for the housing market? Well, as I said at the top of the broadcast, I've actually been trading for 22 years, and when it comes to forecasting or predicting, I actually gave up trying to forecast or predict 22 years ago. This whole business is about responding to what's going on, not trying to predict or guess. I think we've seen a strong run in the housing market, and now this election and the uncertainty with it is out of the way. I think we might see a flight to equities where people are looking for maybe high yielding types of return on their money, and something that you can get started with far less cash. After all, you try and buy a property, you can't get started with $5,000 or $10,000, but you can certainly you can get started in the market with that sort of number too. So certainly a smaller number to get started, and that appeals to a lot of people. Sarah, great question. How do you protect investments? Obviously, say you're away for you're back from overseas, got it. So one of the things that you can do with the type of stock investing that we use, stock and options work, is actually buy, and legally I can't call this insurance, it's actually called a put option, but you can protect your investments with that. So if you come back and say you bought your BHP shares at $22 and they're now worth 10, if you had that kind of protection in play, which some of our clients use, and we teach you about this, you'd be able to sell your shares for, say, $20 or $21, whatever you'd agreed to insure them for. And that kind of peace of mind is very important for people. If you look at the issues that perhaps sometimes stop people from moving forward, and there's another question I'll get to in a moment with this. In fact, I'll answer this in this point. Some of the issues that stop people moving forward is not having the time, or being nervous, having heard a bad story about someone that invested in the stock market. Firstly, not having time. Look, we've all got 24 hours in the day. This is not a time-consuming strategy that we use. Just literally a handful of minutes a week is realistically what you can expect to need. Yeah, most people can find 10, 15 minutes in a week. You just cut down your social media typically, and you'll create that space in no time. But also, in regards to the horror stories of people, most people that are in the market are punting. They're playing black or red. They have no idea what they're really doing. They just buy shares and hope they go up. That's very much what we do not do. We want to have more control, and we want our clients to have more control of the outcome by using certain strategies, which I'll teach at these live 3-hour events, because we'll be in an environment that's more conducive to teaching. There are strategies you can put in place to manage risk all the way through, so when your view is wrong, if you get it wrong, you don't take your leg off. You might lose a little bit of bark, you might graze your arm, but it's a lot better than having something amputated. And that's where so many people fall short. They don't understand how to manage risk. And I'll spend a lot of time on that, on those live events on the 22nd, 23rd, 24th, teaching you exactly how you can and should be managing risk, because making money without sounding flippant can be quite easy. Retaining it can be a lot more challenging, and that's something that many people are finding in the current market. So look, guys, there are some great questions there, and I know they've covered a wide range of things. What I would encourage you to do is this, and I so appreciate you investing the time with me on what we've talked about today. And look, if you're the sort of person that's just interested in skimming the surface and just getting a bit of information, I know you would have taken something out of this event. But if you're really keen to make money, you can't just skim the surface. When you've got mastery, you get paid, and I've shown you 4 or 5 trades a day of mastery level that have enabled me and my clients to get paid. So if you want to take it up to that next level, don't skim the surface, don't read the back of the book, actually roll the sleeves up and learn about this. And those opportunities you're going to have live, 22nd, 23rd, 24th of November, around the country with the Global One team, are a perfect opportunity for you to get deep, inch-wide, mile-deep knowledge is how you start to profit. And you know, if you're going to be good at, if you're going to do something, you want to be good at it. If you're going to be involved with investing, be good at it, because this is the sort of stuff that can give you the peace of mind and the income to live your life on your terms. You know, people often talk about retirement, and they associate retirement with an old person because you've got to be old to retire. The reality is you can retire at any age if you've got the income flow. And these sorts of trades that we've looked at today, being able to respond to what's going on in the world. And let's face it, the US election was known. It wasn't something that came out of left field. You also had a perfect game plan from Brexit just a few months earlier to follow, yet so few people were on those trades. That's why so few people are massively financially successful. Well, our mission is to open that door and help you have those skills too. So I guess on that note, I look forward to hosting, hopefully, all of you on the night at those live events. If you've got any questions that I haven't covered, I know there are a couple that I might have missed earlier on, info@globalone.com.au. That'll work its way through the process. We'd love to answer that question. It'll also enable us to be able to prepare a syllabus on those live nights to make sure that we're giving you what you came for. Okay? It's not a structured PowerPoint. It's an interactive workshop that's going to really teach you how to do this. So on that note, I hope you've had a profitable week in markets. If you haven't, well, the good news is when you learn new skills, you can create a new ending to an old story. And 2017 is a very good chance of being your year financially if you upskill, work out how this really works, lock into a program that's been proven over time, and get the support and tools that you need. And I know we can help you with all of those things. So on that note, it's been a privilege to spend some time with you today. I look forward to spending plenty more time with you. As I say, get along to those live events. If you're an existing client of Australian Investment Education, get along to our Trading and Investing Summit in November. That's really going to help you out too. And I trust that you've taken something from this, guys. But don't scratch the surface. This is about making money go inch wide, mile deep, roll the sleeves up, and set you and your family up for what should be an incredibly powerful 2017 as we see the US economy emerge from the doldrums that it's been in for the last number of years. Great opportunity. Don't look back on it and say, gee, I wish I'd done that. It's happening. You need to be there. So thank you very much, guys. It's been a privilege to spend some time with you. Sam, thanks for having me on board. And we'll see you guys at our live events.
Thanks very much, Andrew. For those of you that are asking questions, the webinar is recorded and will be sent out to all of you. If you'd like to register for the events, please visit www.globalone.com.au/Andrew Baxter. Any questions, email us through at info@globalone.com.au. Have a great day, guys. See you.